It's about that time of day again, folks. Welcome back to your nightly newsletter, boys and girls. Joseph James here. Tuesday evening, November 24th, 2015. Boy, oh boy, oh boy, squeezing out the last few drops of this holiday shortened week. Don't forget, we're going to talk about the holiday schedule in just a moment. Tomorrow really is the last few hours of trading opportunities we're going to get this week. Then we go into the holiday, and of course, who could forget about Black Friday, right? Some people think that's your holiday. We get a jam-packed newsletter in store for you guys this evening, though. Crude oil is trading inside of a wedge. Yeah, something a little bit different tonight. We've got a bunch of ranges in tonight's video. Crude is trading inside a wedge with no real directional bias, which tells us to focus on fading those breakouts tomorrow. We get a plan for the early morning session tomorrow morning on the oil market. E-mini S&P, range bound. I told you you're going to see a couple ranges here tonight. E-mini S&P is range bound, expected to finish the rotation back to the highs at 92.50. I know. Back to 92.50 again tomorrow after the sellers, they tried 3 times to push that price lower today. You know that pendulum's going to swing and push that price higher. But I got a plan for you guys when we get back to those highs in the S&P, so stay tuned for that. Gold is rotating higher this evening as well, coming off the lows of a weekly trading range. So we expect to see the bulls attempt to test 1085.4. I know it's a pretty hefty move before we rotate back down. We get a plan if they fail as well on the yellow metal. And of course, the euro. How can we forget about the euro currency futures this evening? Euro is range bound. We get a bull bias this evening, but the bulls recently failed their rotation, right? You know, rotation, the pendulum's going to swing. Now we expect a fake break of the lows for a nice, tasty buying opportunity. We're going to want to get to it early tomorrow morning as well on the euro. We got a plan for the euro, gold, E-mini S&P, and of course, we can't forget about the crude oil futures. Before we jump into today's charts, though, I do want to remind you folks to make sure you're watching this video on our trading blog here at sidewaysmarkets.com. If you're watching the video on our YouTube channel right now, wonderful. There's a link right in the description of the YouTube video. That'll send you over here to our trading blog at Sideways Markets. A couple of reasons why. Upper left-hand corner, if you're not a member of School of Trade, I'd love to give you a free pass. Come out and test drive our live trade room as a guest for a day. Down in the lower left-hand corner, don't forget, you can register for our nightly newsletter mailing list. All I need is your name, your email address, and then make sure you check your inbox. I'm going to send you a verification email. That way you never have to miss another newsletter video ever again. Right below the video tonight, you'll see a spot to download all the charts that are in tonight's video. You can download those charts right below the video tonight. Over on the right-hand side, you can register for our trial membership. You can learn all about the who, what, where, when, and why. Learn more about how we trade here at School of Trade. You can learn more about our 3 levels of membership, and you can read real member reviews. Now, we normally have someone standing by 24/7, 365, so I'll have to restart that chat server for us. But you can normally find us with somebody standing by to answer all your questions as well on the right-hand side. You guys ready to rock? We get the last newsletter of the week, and again, the last few drops of this week here. We got real important holiday schedule coming up. Tomorrow is listed as a full day. Tomorrow, Wednesday, November 25th. But do not confuse this tomorrow, guys. Remember, the one thing that's very different about the Thanksgiving holiday to the Christmas and Hanukkah holiday season, and of course, we can't forget about our friends with Festivus, but we know that tomorrow is probably going to be travel day for most people. This is a much different scenario. If you're going to be traveling for Thanksgiving, most people don't get Monday or Tuesday off, right? They've got to be here Monday, Tuesday working just like the rest of us. And so they take off on Wednesday. So usually Wednesday is the travel day. It might give us a few hours tomorrow. If I had to guess tomorrow morning, I would say before 10 a.m. That's going to be my cutoff tomorrow personally. I'm going to be watching tomorrow morning, trading until 10 a.m. I couldn't tell you how long that volume's going to last, but it's probably only going to give you a few hours of decent trading volume tomorrow morning. So your job tomorrow after 10 a.m., take a look at that volume counter. Take a look at the price action. How is it moving? And if you don't know any different, right, that should tell you right there. Come out and work with me as a student, and I'll show you guys exactly how we, as we say, take the pulse of the market, right? Checking ATR, checking volume, checking those ranges. Okay, so now you know the plan for tomorrow. Tomorrow is going to be an early in, early out. I doubt we'll even make it to 10:30, right? I doubt we'll even make it to that inventory report tomorrow morning. You know, normally I would say don't trade after inventory because it's Wednesday, but again, I don't think we're going to be safely trading after 10 a.m. tomorrow. So 10 a.m., the unofficial cutoff. You're more than welcome to gamble after 10 a.m., but not on my account. No, thank you. And then don't forget, Thursday is a holiday, right? So please take the day off. We only get so many of these days every year. Please take the day off. Spend some time with the folks you love. As I always remind myself, we only get so many times, so many opportunities every month, every year, every 10 years. I know it seems crazy out there, kids, but time really flies. To really spend the time with the folks that we're actually working hard for, right? So take the kids out for ice cream, go to see a movie, be thankful for your health and prosperity and opportunities, right? I'll tell you right now, being a trader is filled with opportunities. So I'll definitely encourage you guys, take some time to be thankful on Thursday, no matter how you're going to celebrate the Thanksgiving holiday. Just be safe if you're traveling out there and definitely find some things to be thankful. And if you're going to be braving the elements on Friday morning, don't forget Friday is Black Friday. I know, right? You want to see some good crowd psychology? Yeah. Go hang out in front of Walmart, big box stores around the country on Friday morning. I always kind of chuckle about watching those videos on YouTube after the fact. Be careful out there if you're going on Friday, and be careful on Friday morning. I know it looks kind of enticing, but here's what happens on a Friday after a holiday like this. There's this term called scarcity. And what happens is when the markets are closed on a Thursday, you have traders that have to put all their trades on, not day traders like us. Remember, these are the futures markets. They're being used for what? For hedging. Now, who would use the futures markets to hedge? Equity managers, right? Think about it. If you've got a basket of equity, of oil stocks, gold stocks, right? Whatever the case may be, you are going to use the futures market to hedge those positions, the way it's always been used, right? We just simply use the futures markets to speculate as day traders. So the hedgers are going to be putting on orders on Wednesday, but really the one you want to be careful about is Friday, because the one on Friday, typically that's where you get those necessity traders coming in. The traders trading on Friday are usually going to be traders who have no choice. They have to trade on Friday, or it's going to be one of those things where they don't know any different. Either way, I would recommend take the day off on Friday. Do whatever you want, but just be aware there's an NYSE early close on at 1 p.m. on Friday, right? They're going to close down the bond markets at 2 o'clock on Friday. I think you're borderline cuckoo to be trading on Friday morning. I'll let you make that decision. Like I said earlier, you're going to get about 2 hours tomorrow morning. You better take that day off and go tell Grandma you're thankful for her whatever pie she's baking, right? All the time she's slaved in the kitchen for Thanksgiving. Eat your weight in turkey. And again, on Friday, I would recommend taking that day off as well. We will have opportunities early in the morning, but it's going to be really, really low volume. And the dangerous part is the people who are trading on Friday are oftentimes people who really shouldn't be trading at all. They don't know any better. And that's just it's like driving on the highway next to a bunch of teenagers. You're going to get whacked. So take Thursday and Friday off and be careful tomorrow morning. All right. Now that we got that plan underway, now that you guys know the deal, right, for the rest of this week. And again, my next newsletter will be next Monday. Right? Monday, the 30th of November. I can't believe we're finishing up this month of November. We are almost done with the year. Before we get there, though, let's talk about crude oil. Crude, gold, euro, S&P, we got a plan for you guys. Let's talk about it. Crude is trading inside a wedge with no directional bias. I know it seems like there's a bullish bias to it, and you're welcome to call it that, but I personally don't see any bias. It's pretty much a flat wedge, right? We're not seeing any real, you've seen those bullish wedges, right, where they go up and they look like this, right? That's a bull wedge, right? That's a bull triangle. You know what I'm talking about, right? This thing looks like it's just sitting there proud, strong, right? It's got a nice balance to it. So I don't really see much of a bias to it right now. We will treat this wedge exactly like a trading range. Take the high of that wedge down to the low of that wedge. That's going to be your range. You know how we do this now, right? We expand it up. We expand it down. Those are going to be your key levels of support and resistance. And we're going to look to fade every breakout until proven otherwise. Now, here's the one big difference between a wedge and a range. A range can keep going on forever. Well, in theory, right? Usually after a few days, a week inside of a range, it'll usually start to disrespect. I know, pretty rude, right? It won't acknowledge the highs and the lows, right? As you can see, we're no longer acknowledging that same range that we talked about earlier this week on crude oil, right? So now here we are. A trading range, it's really unlimited in the future. It can stay inside that the whole time. What is very different, though, is that a wedge, let's draw it up quickly here. When the wedge is wide, you can buy lows and sell highs, right? Buy lows, sell highs. When the wedge is at its widest, you can rotation, right? So rotation from low to high, high to low, low to high. Okay, now here's the difference. It doesn't last forever, as you can see, right? It's not going to last forever. So what's going to happen once it gets down to the edge of this triangle, of this wedge? It's going to break out. Now, we had one of these on the S&P about, a week ago, 2 weeks ago? I can't recall when it was. Think about it like a jack in the box, right? Bam! And all of a sudden it breaks out. Let's say that it breaks out to the upside. You can fade that high, but be careful, because what's going to likely happen is it's going to pull back. Where's my yeller? Extend this thing out a little bit further. Pull back. And that's the buy that you want right there. So here's the rule. Fade the breakouts until we get down to the end of the wedge, right? The end of the triangle. Once you get into that pinch, then what's likely going to happen is all this pent-up buying and selling, stops are going to get run, it's going to break. Now again, I don't know what direction it's going to break, but I do know one thing. Do not take that breakout. Wait for it to pull back, see a nice confirmation candle, and then go in that direction. That's the way you want to trade a wedge. That's the big fundamental difference. If it goes in the opposite direction, then think of the opposite direction, right? Don't trade that breakout. Wait for it. Right? And again, look for a nice strong confirmation signal, and we'll go to the downside. Remember, that breakout pullback only applies when we're at the end of the wedge. Everything else should be faded. And as you can imagine, I'm going to teach all this stuff to you here as a student at School of Trade. So remember that big difference. Other than that, though, we get a little bit more time here right now, right? I would imagine we've got one more push down to fade back up, one more push up to fade back down. And as I said, as I said earlier in the video, we're probably not going to get much more than a few hours tomorrow morning. So get to it early, get out of it early. And of course, again, like I said, you're looking at fading these breakouts as we go lower, fading these breakouts as we go higher until we get to the edge of the wedge, and then break out, pull back, right? You get the point. Break out, pull back, and go. Break out, pull back, and go, right? So that's the only variable for tomorrow. If we get down to the nitty-gritty of that wedge, be careful of fading and wait for the breakout, wait for the proper signal to go in the direction of the breakout once that pinch occurs at the end of the wedge. How about the S&P? Let's keep going. S&P is range bound and expected to finish the rotation back to the highs at 92.5 tomorrow after the sellers tried, count them, 1, 2, 3 times to push lower today, and they failed. The pendulum is swinging back in the favor of the buyers at this time, so we expect a test of the range high, and then we go from there. The bulls have tried numerous times to push this price higher this week, and they all failed. So a wise trader will wait for the bulls to buy the highs and then sell into their stops tomorrow if and when they fail. Looking at this chart right now, here is that bullish range. This is nothing new. We've been talking about this for quite some time, right? And this is what I was talking about earlier, right? This range can keep going on almost forever. What will happen is it will start to fade, and we won't see it react as well around those highs and lows. But we definitely have a bullish bias into this trading range right now. Like I said last night, fake break those lows, back up to the high, and that's exactly what we're working on right now. We zoom in a little bit closer on this, and you can see, again, count them, 1, 2, 3 attempts to go to the downside. 1, 2, 3 attempts. That second one was real significant. And again, think of that pendulum swinging now. Pendulum swings down all the way back up. we expect to see a possible test of that 2100 and 2107.80. What I can put my money on right now is that rotation target up to 92.5. This is going to be pretty reliable here. Now, again, we do have some low volume expected tomorrow, so if it doesn't happen early in the session, all bets are off, right? I told you about that 10 o'clock kind of line in the sand tomorrow. So sellers tried to push it lower. They're failing. Right, we're going to look for that failure to snap back up all the way up on the opposite side. So our money right now is bull, spike, and channel. My money's on back to those highs right now. My money's on the bulls for this S&P, but that's where we really got to wait patiently. What we need to see here is just like we said this time, well, not this time last week, but last Thursday, when we go back to these highs, the last thing you want to do is buy that high. What my plan will be, when we get back to these highs, I'm looking for sellers to fail to buy it above that high. That's what you got to wait for. You really got to look for those sellers. As soon as we break above, look for the sellers to sell a retracement back down. I know where their stops are going to be, and that's going to be where you're hunting for to at least do it safely. I'm very, very concerned about buying that high, right? I'm very concerned. Look how many times you tried to do it already. A couple times here, a couple times there, right? 1, 2, 3. At least in the last week, we've tried 3. And, of course, they haven't been successful. We definitely expect the pendulum to swing back to the high. Where we go from that high, that is the variable, right? If we go up and we can't get much going and it starts to head back lower, we know 77.25. That's going to be our target, 62.02, right? That'll be the next target down. Remember, range rotation, range rotation, range rotation will give the buyers 2 attempts to get up to 2107. My gut tells me they're not going to get the job done. I'll be fine. Obviously, I'll let them prove me wrong. What I'm going to look for to be a buyer, though, is I'll wait for a strong push higher. You know sellers are going to call the bluff of these buyers are going to sell these highs, and I know they're going to sell that next retracement, and that's where the stop's going to be. That's where I'm looking for that buy. That's the safest way to buy at a high like this, right? So odds right now, the bulls, we go up to the highs, see those buyers try twice to get up to that 07. If they fail, we come tumbling back down inside that range of the 07.725. Again, like I said before, bulls, you guys got it right now in the S&P. We'll see how you do at the highs, though. We're watching that tomorrow morning in real time. Gold is rotating higher this evening. Moving forward here to the yellow metal. Gold rotating higher this evening, coming off the lows of a weekly trading range. So we expect to see the bulls attempt to test 1085.4 before rotating back lower again. We are watching 2 very important areas closely tomorrow, looking for buyer failures. First, if we cannot test the 1085.4 after breaking above the 80.5, that will signal buyer failure. And if we sink below the 72.3 support level below us, we will expect to see price push back to lower the range at 65.2. So here's what we're seeing right now. We've got a major range in our hands, so weekly trading range. We're rotating off the highs, down to the lows, tag your it, back to the highs, right? And then, of course, back down, we'll go from there. We'll worry about what we do when we get back to those highs, watching for buyer failure to sell those highs. We have 2 important lines in the sand right now. So we're expecting rotation, right? We're definitely expecting this market to rotate inside this range back up to those 1085.4 highs. Here are 2 things to watch tomorrow. First of all, if we break above 1080.5 but do not get to 85.4, make sense? In other words, if we break above this recent high, that will be a significant second try from the buyers. If they can't hold, we likely collapse back to the 65.2. That's the first thing we're watching for tomorrow. The second thing we're watching, we have this kind of, I personally don't like this bull channel very much. It's the only thing that really makes any sense out of it. You'll notice we're kind of ignoring that low back here. If you're a trader with me, you probably know exactly, you should know exactly why I don't like that channel. I drew it off the highs, which makes me a little bit more warm and fuzzy here right now, but not a lot more warm and fuzzy, I'll tell you that much. The reality is right now in the gold, if we break below this line in the sand, this already shaky bull channel that we're watching coming up right now, we break back below that line in the sand, it's going to put us back into this range. That means we're also going to get a pendulum swing here all the way back down. So don't forget, we are definitely expecting bullish rotation. The target is up at 85.4, right? My bet's on the bulls here for the yellow metal, but two scenarios. First, if we break above 80.5 and we can't get to 85.4, that'll take some patience. Don't forget. It's not going to just go up and then go, okay, we're not going to make it, and then come back down. It's going to go up through 80.5. It'll struggle, and then you'll see it collapse. It'll usually be later in the session when that happens. And then, of course, I think the more challenging one here is going to be the 07 2.3, right? If it gets below 07 2.3, I would expect the buyers to try again, but boy, they're really feeling real heavy, and we should see this price just kind of collapse back down to that 65.2. All right? Scenario 1, we push up to 85.4. Scenario 2, we push above 80.5, but not to 85.4, and we head back to 65.2. Scenario 3 is we cannot stay above this line in the sand. As much as the buyers try to hold it, we'll fail back to 65.2, and that should get that pendulum swinging even further, and they're going to make a run at that 055.1. Mark that down, 055.1, if we see these buyers, right, failing to get to that 85.4 tomorrow. Okay, last but not least here, wrapping up with the euro. The 6E currency future, range bound. We get a bullish bias this evening, but the bulls recently failed. Oh my goodness, they failed their rotation, so we can expect a fake break of the lows for a possible buying opportunity tomorrow morning. The range rotation has been almost perfect in today's session until the end of the day when the buyers tried and failed to reach the highs. Keep an eye on the 0667 area highs, because if they can't test that high, we are going to push lower to find support levels to work with tomorrow for the next trading opportunity. As you can see, this is a pretty easy chart, right? Very easy chart to look at. You'll notice here we have a bullish move into a trading range, nice and balanced, and look at the rotation. Tag, you're it, tag, you're it, tag, you're it, tag, you're it, tag, no, you're it, no, you're it. And then wait, what happened here? No test of the 0667. You've heard me say this about a dozen times already in this video, probably 100 times this week. What's going to happen if they can't push it? Pendulum, right? Pendulum will swing. We expect if they don't get to 0667, we're going to be making a run at that measured move at 0622. My money, though, is on 0609. And then from there, if we get to 0609, we now go into the next range rotation. This is where it gets a little bit complicated, but it's worth it if you know how to trade this. First step, if we don't get to 0667, the pendulum swings down to 0609. What if we don't get to 0609? You guessed it, it's going to swing right back up again. So watch out for both of those failures for that buying opportunity tomorrow, right? It's going to fake out those sellers and then whoop, right back up, gunning for that 0696 tomorrow. Step number 1, scenario number 1. Scenario 1 for all the Euro traders. We make it to 0667 and we keep on rotating. Right? Range rotation, 2-try rule to get there. If they can't get there, expect the fake break, the pendulum swing. Again, I'll teach all this stuff to you as a student here at School of Trade. The second scenario is we do not revisit 0667 and we make it down to test 0609. We make it down to test 0609. Now we're in the range below and we rotate, buying lows, selling highs from there. You ready for scenario 3? Here's the one I'm excited about. Scenario 3 is the one I hope we see tomorrow morning. Scenario 3, we don't reach 0667. We make a run at 0609, but can't quite get it. And then, of course, guess what? Bullish bias. See, that's the good stuff right there. We got a bullish bias on this range. If they fail to get to 0669, blammo. we rotate, and the pendulum swings right back up. And our target on this one now is going to be 0696. Remember, trading ranges can be definitely confusing when you're a new trader. But once you learn range rotation, the 2-try rule, remember, it's the 2 significant tries, and then, of course, the fake out, breakout, and, of course, the pendulum swing. I'm going to be teaching all this stuff to our students here at School of Trade. I hope to have the opportunity to do the same thing with you guys. Euro, bullish bias, right? We talked about the 3 scenarios on the euro. Gold, rotating higher up to that range. We gave you guys 3 scenarios on the gold. The S&P, same thing, right? Same thing, expecting a range test of that high. And then hold on tight. We're watching for buyers to fail, to sell. We're watching the sellers to fail, to buy. Pretty much the same thing we talked about last Thursday. And then, of course, how can we forget about the crude oil? Don't forget, treat it as a range until we get to the point of that wedge, right? And then, ba-bump, 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 right? Bam! Buy the pullback, but wait for proof. Wait for proof. Don't try to buy that breakout. Don't you dare buy that breakout. Last but not least, I want to remind you guys to have a great Thanksgiving holiday on Thursday. I'll tell you what I'm thankful for. I'm thankful for liquid markets. I'm thankful for the opportunity to make profit every day in these financial markets. And I'll tell you, I'm really thankful for my ability to teach, because I really have found that it is such a rewarding part of my trading career, is being able to share this information with my colleagues, my students, my clients here at School of Trade. So I'm thankful for you. I'm thankful for this amazing environment we operate in every day. I'm thankful for the freedom that we all kind of take advantage of, right? We can't take for granted every day. And I'm definitely thankful for a few days off, that's for sure, too. I'm going to eat my weight in turkey. If I'm not back on Monday, check the local ER. I might have overdosed on L-tryptophan. If you know me personally, you know I'm not going to be doing that. But bottom line is, have a great Thanksgiving. Check out the free trial on our website at schooloftrade.com. Learn more about our 3 levels of membership, beginner, intermediate, and advanced. And we've always got someone standing by here. The next newsletter will be next Monday, November the 30th. We'll be back here again, and our next live trade room tomorrow will be next Monday as well, right? Monday, November 30th. We'll be hanging out in our chat room tomorrow morning. Only got a few hours tomorrow, so be careful out there. Be well out there. Be nice to each other. Remember to tell Grandma how much you miss her and appreciate her and all of her wonderful cooking this weekend. And I'll see you guys next time. My name is Joseph. Adios, amigos. Bye-bye for now.